Good morning. Good morning. Welcome to the mini crash. All right. So markets, as everyone knows, are down and continuing to drop here. And what we're looking for is a buyable low. And not for swing trades, for day trades. We'll see where things end up. This is a news-driven market, which I've said before. But as prices have dropped last week, almost vertically to the downside here, and as you can see, this S&P bar is beginning to grow. It's moving toward the 2880 level. But this swing low down here, a bit lower, is where I'm going to be looking to buy, at least for a day trade. I'll look for that to stabilize on a 5-minute chart, maybe even a 2, assuming that it does get down there. But what we look for is the same thing that we look for every day: support, resistance, and trends, the way prices move. So as we can see, this is moving, as I said, vertically, almost vertically, and it's gotten far away from the 20 MA. We use that as a reference point. But what we're really looking for is, well, it's getting far away from any price resistance, which is creating this void above. Now, what we see happening here on the hourly chart, as things move down, they stabilize. It's a rather controlled decline here. So when we look at what's happening on a higher time frame, in this case the daily, we can look into a smaller time frame or lower time frame to see how it's actually dropping. And what we want to see is these match. In other words, I want to see capitulation on the intraday time frame down to this level. And I may, this may look like one big bar at the open. I don't know, of course, what'll happen. I'm just looking at what is in the moment and what reference points there are to trade off of. And we may, as I said, one big bar on the hourly could be like a waterfall decline and a capitulation move. This could be like the 5-minute chart, not exactly, but I'm pointing out to you the picture of what we're looking for is the 5-minute chart would start falling multiple bars in a row into this level, this area. It could poke down through it. It doesn't have to stop right at that level. So don't even pay attention to the number here. The lines, the platform puts a number there. I don't even know. So we just look at an area and say, well, this is about where buyers should want to step up. Same thing, buyers wanted to step up here, and they did. Buyers wanted to step up here, and they did. And then it failed, and it continued to move lower. So when it gets down here, my assumption is because historically that's what happens, buyers will want to step up here. And we'll look at the intraday time frames to see what that picture looks like, meaning, can it look like this picture right here, this big reversal bar, or this picture right here, or this picture right here? So the pictures can be an endless number of combination of bars. And as you learn the concept that we call bar by bar analysis, you no longer are attached to, well, it has to look like that candlestick pattern because that's what's in the book and that's the one with the higher probabilities or whatever. It could look like this. Who knows? We just know that when it gets down to this level, especially if it's capitulating to the downside where sellers are just overwhelming any demand that there is, and we get the picture at the appropriate location, we're looking to be a buyer. And then we'll see what happens from there. Now, the way that this is coming down, it doesn't turn on a dime and go right back up. We've seen some of that in this Mr. Schizo market last year. But the uncertainty that's happening right now and the way this is coming down, this is going to take some time for this to chop around and stabilize. And we'll see. I mean, this eventually could be heading all the way down here. We really don't know. And so as prices drop, we then, as we looked here in a smaller time frame, well, we also look in the higher time frames. And I say, well, this is still an uptrend here. In prior pre-market sessions, I talked about the fact that momentum was slowing here, but it was going sideways. Well, now it's broken that level. We also talked about the wrong way option traders over here that were, loaded with call options looking for this to explode higher. And it certainly looked like it could, but those guys are typically wrong. When they get that excited buying, an extreme amount of calls like that, it doesn't mean it has to go down like this, but, it tends to go choppy to down until, those guys get beaten up. Anyway, so uptrend here, we'll see if this stabilizes here or not. And what we also going to do is we're going to look at other markets to see what matches there are, so to speak. Other things that are in alignment that could be next to price support or the lack thereof. So as we look at the NQs, we can see that for it to reach its level, it's going to have to fall quite a bit more. Now, we always look at these things as areas, right? They're always areas. Don't get hung up on exact levels. So it could hold here at 7,500 while the S&Ps are down here near this prior swing low. And then we, of course, look at the same thing. Right? Well, this is an uptrend. Can this start to fall, vertically to the downside where buyers are throwing in the towel? So we know that buyers are stepping up here. They're not winning the battle. They begun to here, and then they lost, but they aren't just a void, so to speak, of buyers or demand, or where the supply is just overwhelming demand, or where the bids are going to be way down here. And that's where we want to see this pattern on a smaller time frame, where prices fall into this area. And we see that happening on, hourly could be one big bar, 5 minute be a bunch of bars. So that's what we'd be looking for. The Dow, right, starting to fall straight to the downside. Yeah, I guess you're asking me that, Fabulous. Breadth and sentiment show possibly? No. I covered that in the letter over the weekend. Let's see if this is here. While breadth has gotten here, it's gonna push much lower, but we need to see these wrong way option traders now load the boat on put options on this drop. And you could say, well, that seems kind of novice to be buying put options on a gap down like this. But why were they buying an excessive amount of call options up here? I mean, that's just what they do. So we want to see what that is. Now, if when the market opens and we get that data on the put call ratio and we see that it's not at an extreme, that's going to suggest the market's going lower. So that's what we'll be looking at, all of those things as the market opens. The tick we'll look at to see, the tick is probably going to open up at probably like minus 1,500, which is just going to confirm the gap down. But we'll see how far it bounces. And, we look at, support, resistance, so on and so forth as to, where these things are lining up as I'm explaining here. The Russell, I've got limited data as these are the Russell futures, but you can see they're kind of just grinding down as well. And then they really don't have much support here at all. Maybe this 1,500 level being around number holds it. And there is some congestion there. We'll see. The Russell, take a look at, it's got this head and shoulders top formation that we've spoken about. It's here at 149-ish, right down here. So I think this level, give or take 148, we'll see if it holds around here or not. So what I'm looking for is these different markets and their levels that they're at. And what you should be doing is setting alerts at these different levels to see one may get there before another gets there. And, we have some indications of the market beginning to turn around. And from this point of view, that turnaround is only for considering, intraday long trades. Someone had asked in the room earlier, in the green room earlier, about the shorts. Well, what we look for with the shorts, and you can see all the red that's down here, we look for things that still have room to fall. Now, the problem with shorting on gaps like this is that there's no resistance level. So if something's in a downtrend, as this is here, and it rallies up, to this level, well, then we look for pictures of selling or sellers taking control. Now, with a gap down like this, well, there's, probably nothing to trade off of. So what we look for, right, let's say price is open here, and for whatever reason they start to rally, we look for W bottoms, W tops, M tops, I should say, that create reference points of resistance, and then we can short against those levels, looking for prices to go lower with stops, slightly above that level. So that's how to intelligently look at short opportunities with gaps like this. But you have to start going through all of these stocks to find out what is possibly gapping down just under a support level and has room to go down. Whereas if you find something that, say, was gapping down here, it certainly wouldn't make any sense to be shorting something like that. So, we look at these technical patterns, but, you have to bring common sense to what you're doing as well. All right. Oil looks like it's heading lower, just kind of chopping around here, but wide range bar is at the bottom of it. Bearish. Looks lower. Bonds are exploding higher here. We talked about over the last few weeks the consolidation that was at resistance there. And now with bonds ripping higher like that, we've got yields falling dramatically, which is now going to potentially, this is the last holdout as far as the yield curve inverting. The other measurements or rates, 3-month against the 10, the 3-month against the 5, they've already inverted. So this is the last holdout, so to speak. And one of the things I wrote in the newsletter over the weekend was, I think this is something that may force the Fed's hand to do something early, and could be a race to the bottom of lowering interest rates. So better keep that in mind as far as, getting aggressively short in situations like this, that if the Fed was to come out and do a quarter or even a 50% cut, your shorts are going to get killed. So I don't know that that's going to happen. No one's sending me an insider text message. But I've experienced that. And Alex reminded me, I think it was in 2003 or 2005, I got caught in one of those as it happened. So you get experience and you learn things like that is possible to happen. Gold's going up, looks great. Silver is lagging, right? So it had made the later run, and now it's chopping around, lagging a bit. And what time is it? 16. Dan, you probably got stuff to more stuff to go through with all these gappers, but that's an oversight as to what to look for as to longs and shorts, and keep cool, let these things settle down a little bit, and money management is the key to surviving. So all yours, Dan.
All right, good morning. Well, when you say there's a lot of gappers, it's actually on days like this, it's too hard unless we find something very unique. Like you said, things are going to be gapping down big, and I'm afraid of a market snap back. I need more information with, everything you just went over.
Yeah, but if we don't know what's going to happen, Dan, but if we did get a turn, say later in the day or whatever, I mean, I think this should be like, Christmas, for you, you're especially looking for these spread candidates. And, if we get a significant turn, I mean, with this kind of a drop like that, those put spreads should be like, candy store opportunity.
Exactly. I absolutely love selling puts after multiple days sell-off, without a doubt. And Howard, I agree, you know, something on its own page would be an up gapper. You're absolutely right. I have NDAC. We have a put spread, and look, it's up. That looks great. Anything not of the Dow 30, well, there's zero that are gapping up. But yeah, that's how we play relative strength. Look over here. I have these two had earnings. WEC up 4 cents, but still. So WEC over Friday's high. That's a 1, 2, 3. It looks great. And you know, the longs that I have in the letter, we'll go through them. I mean, the new longs, that is. I'm not going to even worry about those triggering, because if they do, then they're strong, and then I have no problem buying them. Tyson here had earnings. Wow, this is a beautiful symmetrical triangle. Look, you got a horizontal resistance, you have higher lows. So let's see, that's gapping up to 81.50. Nah, it's just gapping a resistance. Let's look at we only have 2 opens in the weekly options trader. Let me pull these up. Costco, we have a call spread, and retail got hit really bad on, you know, the Trump stuff. And Zoom, we have a Condor, and we said that the put spread was making us nervous. Now it's gapping under our stop. I just sent out a telegram that we will use 30-minute low for anything, because that's our gap rule. Lynn, very sloppy though. I have an SAFM as a put spread idea. If it takes out Thursday's high, it looks great. Open trades in the swing letter, BSX. Can't tell where it's gapping, but it was showing relative strength to the market. Coup, we have a call spread gapping down, so I'll be moving the stop to actually the Friday's high now. NDAC, we're good long stock over the high. Well, actually, we're already in this at 98.26. It hit Friday afternoon. Postage, we're short, and that's gapping down. I'll move the stop on that also. NTNX, we have a third. And you know what? Let me just move that right now. Move stop 5-minute high. Because that's now looking to be an exhausting gap with it oversold pre-market also. Give me 1 second. All right, here we go. Continuing. TERP. TERP is still relative strength. Look at that. XPO, we have a put spread gapping down here. but our put spread is the 65s, so it's way far away. And that's it. So our only problem child, actually most of our portfolio is doing great other than the Zoom. That's our only problem child on the put side. ON had earnings, and that's gapping down 1850 way down here, no pattern. Some nasty engulfing on the weekly. L had earnings, I can't tell what it's doing. DO had earnings, and that's in pain. That's a huge negative gapper. Cars had earnings. Wow, that's a big gap. Now that one might be a gap and snap candidate. I'm gonna watch that, because see, when you get fluid bars down, wide range, far from the 20, now you're having a huge gap down. Again, that's just we in the letter. Would we still? Oh, excellent question. Excellent question. It depends if the gap's going to be too excessive or not. So let's watch exactly that. This one still looks fine. It's breaking down here from this end of day base to bear 1, 2, 3. So we'll use 5-minute low for AEO. And same with Urban. Yeah, they both look good. I'm going to put them both in a window here. But let's say they were gapping down, $1. That I wouldn't, because I would say 5-minute low is too big. Redfin, McGraw gave me this one. I missed this one on Friday. Or no, we didn't. We did look at it right there, and it got a little sloppy. But this is McGraw, a put spread candidate, and only down $20 stock, only down 21 cents. That's not bad at all. This one's strong. We'll keep an eye on that. This is strong. I think McGraw sent me these. ALLK. That I wonder if that's a buyout or whatever. Well, it's not acting like a buyout, but I don't know what the news is, but that's a massively big gap up. And this is a massively bear gap down. $4, it's gapping over 50%. Wow. Cash, I'm watching as relative strength. Let's just see what it does here. As long as it holds this 50% of that bar. LB, this is a day trade candidate for a, and it's kind of one of these flags that's breaking to the downside that we talked about in MT Live. APHA, this was a marijuana stock that had earnings on Friday. And I'm watching in the pot sector. We gave a put spread idea on this over Friday's high. Tilray, perked here, and I like the weekly higher low. And the Curlif, I like this one over Thursday's high. PPC is a bull 1, 2, 3. So this one, if it triggers, I like it. It's strong. Hexo, getting climactic, a little retest here. We'll see if we can get a trade in that. SAFM, I talked about. Zebra, 193, coming into the gap here. Levi, I know Greg was watching this on Friday, a retest pattern, but I don't like the way that it got here. If this is a pro gap down, you had another gap. I mean, it's damaged goods. But over, let's call it Wednesday's high, that would be a put spread candidate. SIBO down, you know, getting hit here. AYX, I had in the letter as a 1, 2, 3. It's gapping down, so they're fine. You know, they aren't going to hit. Remember this one, Chris? We were talking about shorting the 30-minute low on Friday. This was another retailer that got hit, and I said you could use a really tight stop of you know, Friday's 30-minute high. That would have been a nice gift to have. MTZ, that's a bullish bar. That's worth watching. Now look at that. It's down only 35 cents. That's going in my list. Absolutely. If this thing can just stay down 35 cents and then take out Friday's high, that looks great. QSR here, that's a watch. Millennium and MLM we have as a long watch. I like this one over Friday's high. Coup, I'm going to go ahead and move the stop right now. All right, we're getting selling at the open here on spiders. Yep. Yeah, this NTNX, I gave it a 5-minute high, but I almost said, you know what, just cover it pre-market. I'll just leave it since the market's still weak. 5-minute high. Got postage now.